All right, guys, welcome back. So, in this lecture, we're going to talk about something really important, understanding the different markets you can trade. Okay, so let's go ahead and do that. Okay, so here's the thing. A lot of people ask me, AJ, should I trade? Should I trade in crypto? Should I trade Forex, stocks, futures? And my answer is it's always the same. It depends on what fits your lifestyle and what you understand. But here's the beautiful part. Okay. The geometric system works on all of them. The principles of market structure, volume analysis, Wyckoff methodology, those are universal. Markets are markets. They're all driven by supply and demand, by human psychology, by the big players moving money around. So let me break down each market for you, and then you can decide which one makes sense for you. Okay. So first, cryptocurrency. Okay. So which stays for 24/7 open and it's the beast. It never sleeps. Okay. 24/7, 365 days a year. Christmas Day, whether it's Christmas Day or it just stays open. And so yeah, we can trade anytime. The blessing is trade anytime. Curse is can overtrade. Okay. So volatility is our friend, and volatility means moments. Moment means opportunity. Money is on the table. You just gotta be confident enough to pick it up. Okay. Understand the 24-hour cycle. No official open close, but patterns exist. Asian session, European session, US session. Right. Second is Forex. Forex exchange, foreign exchange. This is the biggest market in the world. Trillions of dollars traded every day. It's massive. Forex has defined trading sessions, which some people prefer. You got Asian session, Tokyo, Sydney, European session, London, this is the big one, and US session, New York. Okay. So now the liquidity in Forex is insane. And liquidity is like fuel for a rocket. The more fuel you have, the further you can go. High liquidity means tighter spreads, better fills on your orders. Okay, but Forex moves in pips, tiny incremental moves. So you typically need leverage to make meaningful profits. And leverage is a double-edged sword. Okay, and yeah, it can amplify your gains, but it can also amplify your losses. For day trading with geometric system, Forex works really well because the major pairs, Euro USD, GBP USD, USD JPY, they respect technical levels beautifully. Structure, cycles, volume, it all applies. Next is stocks, the structured market. So the defined hours is like built-in discipline, meaning 9:30 to 4 p.m. Eastern. Okay, that's it. Market close after that. Go to bed. Okay, this discipline is into the structure, and where the action is opening range, first hour highest volume, closing auction, last hour big moves. Middle of the day often choppy, low volume, grinding sideways. Okay, so I'm just giving you market overview of like how different market environment have their own personality, right? So the best time frames is 15 minutes or 5 minutes. Okay, and with geometric trading system, stock works great as well. All right, and I'll show you later on what I mean. Okay, now we're talking about futures. Okay, what are futures? This is like the professionals' playground. S&P 500, Nasdaq futures, crude oil, gold, all traded as futures contracts. Okay, futures are similar to forex in that they trade almost 24 hours, but with defined sessions. And futures have this beautiful volume profile. You can see exactly where volume is concentrated at each price level. Okay. So for Wyckoff analysis, um, futures are amazing because the volume data is very clean. You're seeing real transactions, not just tick data. Okay, and the downside is that future Futures require more capital to start. If there are margin requirements, contract sizes, it's more complex for beginners. But if you're serious about trading as a career, futures is something to work toward. Okay. So we covered four market, but basically the same principles. Okay. Crypto, Forex, stocks, futures. Okay. Then which market should you choose? So basically the question is which market should you trade on? So let me give you my honest recommendation. If you're a beginner with limited capital and you can handle 24/7 markets, start with crypto. Okay. Yeah. And you can trade very small positions. The barriers to entry are low and you'll learn fast because there's always market activity. If you want structure and defined hours, stocks or Forex, um, stocks if you are in the US time zone, Forex if you want to trade during specific sessions like London. Okay. And if you have more capital and you want the cleanest volume data, futures, but work your way up to this point. Okay. Now here's the key insight. Don't spread yourself thin. Okay. Pick one market, learn it deeply, master it, then you can expand. Okay. In this course, I'll show you examples from multiple markets, but the concepts are the same. Okay. Once you understand structure, cycles, and volume, you can apply it anywhere. All right. So let's summarize. Um, Crypto 24/7, high volatility, low barriers, great for beginners. Okay. Forex, session based, high liquidity, needs leverage. Okay. Stocks, defined hours, good structure, opening or closing volume. Okay. And futures, professional grade, clean volume data, higher capital needed. All right. So all of them follow the same market principles: supply and demand, cause and effect, effort versus result. The Wyckoff laws apply to all markets. Okay. So here's the universal truth, guys. All markets follow the same principles. Okay. Now what's next? So in the next lecture, we're gonna dive into the price action. Okay. And support resistance and how to identify trends. This is where we start seeing the market structure come alive. I'll see you there. So now you understand like which market to trade and the principles applies everywhere. So this is the summary of it. Okay. I'll see you guys in the next lecture.